Welcome to the Cybertide podcast. In each episode, Adlumin hosts guests from across the security industry to dive beneath the headlines and explore the cyber attacks, industry trends, and how small to medium-sized businesses can protect themselves from cyber risk. I'm your host, Mark Sangster, strategist with Adlumin and author of No Safe Harbor, The Inside Truth About Cybercrime and How to Protect Your Business. On this episode, we explore the latest trends in cyber insurance. Kirsten Bay joins me to discuss this heady topic. She brings more than 25 years of experience in risk intelligence, information management, and policy expertise across a variety of sectors and is the CEO of Cysurance, a next-generation risk mitigation company that insures, warrants, and certifies security solutions deployed by enterprises. Kirsten, welcome to the podcast.
Thank you. It's a pleasure to be here.
You know what? I'm really excited to talk about this. I don't know what it is, but insurance has been this kind of pet project of mine for years in cybersecurity, and I'm very appreciative and glad to see the success that we're having in partnership with Cysurance. But before we kind of dive into some of the big topics we're seeing now, just spend a few minutes and tell our viewers, give us a little bit about your background and some of the congressional work that you've done, and I believe you were a major presenter at some of the big conferences like Black Hat. So talk about that for a minute.
Yes, well, it's a delight. It is an interesting moment in time where cyber insurance and insurance writ large is actually an interesting topic. So it's exciting for that to be. And I think part of it is because it enables us to draw a much stronger line between financial impact to organizations in relationship to security implementations. And so I think in the big picture, that's what's driving a lot of this interesting discussion we're having. And as far as how I got here, I like to say I'm a serial student, so that it doesn't sound quite as circuitous. But I started my life in supply chain risk management and then financial risk management for portfolio management. And so between those 2 points, working in supply chain risk is fascinating because the things that you think about in terms of impacting revenue and impacting supply chains really are driven by geopolitical risk, weather risk, all these components that are physical in nature, but really get you thinking about, well, what are the components that might disrupt the delivery in a way or disrupt some raw materials such that we can't deliver on time, right? That's the mission. And so when you couple that with managing financial risk and looking at how you use intangible assets like restricted stock, art collections, and what have you to balance how do we invest in securities, those 2 points are really instructive in terms of how we look at overall business risk. So that's kind of how I started my career. From there, I was asked to help participate in writing a book on built-in security. And I was like, you mean securities? And they're like, no, security. And at that point, I didn't really know much about security, but what they wanted to identify was how do we value data for loss in a built-in security model? And in sort of looking at supply chain risk analytics and intangible asset valuation analytics, it really sort of struck me. I had this lightning bolt moment where I was like, there's this huge opportunity to change this security discussion from being a sunk cost discussion, things that people outside the security realm don't understand, to how can I, as a person who understands measuring financial risk, how can I bring that to the fore and bring that to the security industry so that I can help influence a different conversation internally for organizations.
So let me back up for just 1 second. You said you were
Mm-hmm.
working, or that was working on a book. So did you publish that? And if so, what's the
Mm-hmm.
title and where can somebody purchase that?
Well, I don't know if anyone can purchase it still, but it was done with. It's been a little bit of time, but it was done with some Bell Labs engineers, and it was cyber 2.0 in a. I can't even remember the name of the title anymore, but I can get it for you. But it basically was, how do we bring built-in security models into a cyber 2.0 world, and we think we published that in 2008. So it's been a while, and we're still having the same conversations. So it's as topical today as it was then.
Oh, absolutely, right. And I will definitely look that up and find that. So
Mm-hmm.
I'm always interested in finding new sources and resources. And you struck a real chord here, because one of the things that I always preach is that cybersecurity is not an IT risk to solve, rather it's a business risk to manage. And
Mm-hmm.
um, helping organizations, particularly smaller ones, right, who don't have that kind of enterprise risk type of approach where it is highly quantitative. It's tougher, right? And as you said, I mean, you talked about a sunk cost, and that's a big one in security. You always hear, what's the ROI on this? And then it turns into one of those defend, deflect, and deny kind of, well,
Hmm.
what's the cost if you get hit with ransomware? And it's just this sort of back and forth debate. And I'm not sure the rally comes to anything because you're still not really proving the efficacy from a risk perspective, your risk mitigation perspective. So it's nice to see, and I certainly would love to dig into that deeper. And in my area of risk, I've tended to look at other things like the things you were talking about. We talked about economic, right, natural disasters, major outages, things like that, and in terms of what are the kind of contributing factors and how do we truly understand risk versus the everybody I think in the cyber world just goes, well, the risk is the bad guys, and it's like, no, they're a factor.
Hmm.
But they're just a tiny piece of this, right? What about the emerging tech that you decide as a business to deploy, right? You decide to move everything in an IoT connected world, like in a factory. That has a whole whack of risk that comes with it, but it's not simply down to bad guys are good at breaking into SCADA systems.
Well, absolutely. And the factors I mentioned earlier are relevant to everything you just said in terms of geopolitical risk is a factor. I mean, when you think about NotPetya and
Hmm.
Russia attacking the Ukraine,
Oh
and yet
yeah.
the downstreams, like the splatter impact across major multinational corporations and creating absolute bricked environments, which was an, a point in time of cyber insurance that created this sort of right turn in terms of how insurance companies thought about insuring these risks because there's the war exclusion, but one never really
Right.
contemplated that entire factories would get bricked. And before we would see all those nice little bubble charts around this is the worst data breach ever, but it was data that we were talking about, not entire infrastructures. And so that all of a sudden kind of started this whole ball rolling of the hardening of our cyber insurance market from that moment where we started to realize the broader implications beyond just cyber bad guy insurance and is cyber bad guy acting on behalf of a country or acting on behalf of himself in this moment because they do both. And so the world is a lot more gray in this place than traditional sort of kinetic warfare, and we think about what triggers a war exclusion if we were thinking about that in the physical space.
Yeah, kinetic warfare versus the hybrid kind of warfare that we saw in the
Hmm.
Ukraine as an example, right? Using cyber tools to shut down utilities and government offices and those kind of things. And yeah, that's right. I mean, that's what we're still continuing to deal with that, and that's one of the things that I always try to promote with smaller companies is in order to break some of these misconceptions, right? Is that, well, we have nothing we're stealing. How would some
Right.
state even know we exist, and why would they want to attack us? And it's like, well, they don't, but it's not your zip code, it's your IP address. And maybe they do get mad because of whatever it is, tariffs or geopolitical activity that goes on, let's say actions against Iran as an example. And I have seen upticks in cyber attacks afterwards. And whatever it's, whether it's vengeance or it's the only way that guerrilla warfare against the big army or whatever you want to call it, we certainly see an increase. And in fact, from an insurance perspective too, right? And I'm hoping you can help illuminate some of this. Is certainly over the last few years we saw big spikes or big increases, I should say, in things like claims against ransomware attacks, business email compromise. And it seemed at one point that it was almost not profitable, that I guess the underwriting tables were upside, underwater, right, as it were.
Hmm.
And so now we're seeing a response in premiums. So what are you seeing going on now in the insurance industry?
Well, you're absolutely right. I mean, the arc that started that retraction in the market started with NotPetya, kept accelerating in terms of how do we start to limit coverages? How do we start to understand what requirements need to be in place from an infrastructure and controls perspective? And then, bam, right, we had COVID, which I talk about this a lot in my speeches that I give, is that at that moment we saw a 667% increase in phishing attacks literally overnight. And you had people who are distracted and anxious and distributed and clicking on things, and it just was the perfect storm for
Hmm.
speeding up that curve of huge market contraction, which we refer to as a hard market in the insurance world, because what happens is the available capital to fund insurance policies, called capacity, just left the market, and now it became almost impossible for managed service providers to get coverage, mainly because a lot of the MSPs were the entry point for systemic attacks.
Hmm.
Um, we had people who were distributed in workforce, and do we cover those things? And so it became very challenging. And now we see this curve sloping back downwards, and there are a couple of reasons for that. One, it turns out that people filling out those attestations weren't entirely honest. It wasn't that they were misleading people intentionally, but there was gray area, right? In those, when they did the forensic analysis, it determined that, wow, they really like didn't have MFA on at all. So the enforcement of controls, and also the awareness of what limits damage, and we call it frequency, severity, and impact, what limits those things through controls certainly has been really impactful in a positive way. But also the insurance market cut the limits of premium, cut the limits that people could get in terms of the size of policies they could get, cut coverages, reduced things like ransom coverage by half. So they limited their own exposure. And so when you look at claims activity, it's decreased, but that's also because they've limited their own exposure. So the dollars being paid out have reduced as well.
Interesting. So yeah, there's okay. I didn't realize that because I have looked at some of the trends, and you're right, it did
Mm-hmm.
seem to be down a bit, but that's exactly because it's no longer insurable. Uh,
Right.
and that's yeah, that's what we see with a lot of our customers, or I've seen previously as well, is that same challenge of small to medium sized enterprise premiums are too high, and in fact, long before you get to the bill, it's the due diligence, and this is probably 5, 6 years ago now, but I had one company that we're helping, and they looked at some of the DDQs that they received from the insurer, and they're going yes, no, yes, no, yes, no down this list. I'm like, no, no, no. If it's yes, no, it's all no. Like the point
Right.
here is you're looking at a little more than that, right? You can't say, do I have endpoint? Yes. Do I have this? Like, no, they're looking to figure out, like you said, with multi-factor authentication, how's it rolled out? How's it monitored? Is it enforced? How does that relate to the policies? And all those kind of things, right? So as you know better than I, and that's one of the things actually I really liked with Cysurance is the kind of the approach that you had with those certified warranties. The idea that it's like, look, what we're looking for is these core things, right? The brushing and the flossing and getting exercise and getting 8 hours of sleep a night kind of things is security, right? The Like you said, encrypting protected data and using passwords and multi-factor authentication. I think that really creates, if nothing else, it's a bit of a baseline, because a lot of these small companies are like, NIST is huge and there's so many controls, or CIS 20 or whatever it is. I don't know where to start.
Mm-hmm. Mm-hmm. It's true. And the thing that I like to think about is I do refer to it as the cyber seatbelt, because
Uh,
I actually did a bunch of research on the seatbelt specifically and how it became an insurance mandate. And they tracked it over 10 years when the 3-point seatbelt became the part of the car. And it was determined that it massively impacted deaths in car accidents, period, like an 80% reduction. And so I think about this the same way in with cybersecurity, which is these few controls, and it's not 1,000, it's about 7, really reduce that severity and impact
mhm.
of an incident. And so I like to say that what insurance companies want to see is more fender benders and fewer totals, right? So we want fewer cyber totals, and the industry is yet to be convinced that we've figured out how to do that, and that's the key. And so what makes that happen? Well, number one, identity and access management, key, right? If
Mhm.
someone can get in, don't let them get beyond the front door or from the vestibule, or
Right.
and so if we can do that, and we can make people authenticate in, and we can make sure that we limit how much people can move across the environment, how much they can steal because it's encrypted. If they get it, well, too bad, you can't use it anyway. Those things, those two things alone have such an impact on the severity of an incident that, and I'm not saying don't do other things, because I'd be the last person to ever say that, but it's also important, especially for small organizations, to recognize it's not this infinite crevasse that you look into of requirements and controls and products, and you can actually get started and do good things to keep yourself safe just to kind of roll it out.
Yeah, absolutely, right. Yeah, the cyber void looks back into you as you look into it. And
Exactly.
yeah, and it's true, right? There's so many fundamentals in place that I don't think, the way I'll talk about this, for example, when I work with these companies, is I have a slide where I show them a whole bunch of, kind of like a tiered, approach, right? Is the bad guys are, they work from like campaigns to get initial access into persistence and so on down the line until we get to the execution and the business disrupting event, whether that's a ransomware, an outage, extortion, data exfiltration, and again extortion, and so on. And my point to them is it's good news, bad news, right? Because the bad news is that, yeah, they're doing a lot of stuff and they're in your environment for a while. And the other bad news is probably the incident response firm that gets hired when you make an insurance claim is going to come in and find all these things. But the good news is, well, they've been in there for a while and they touch a lot of stuff. So there's those opportunities, and that's what I constantly preach to them. Is like, this is why these things matter. Why basic fundamental, like you said, the cybersecurity seatbelt, because you can't control the other drivers on the road. There are certain things
Right.
where you just have to accept a risk. You're a bank. Banks get robbed. You're a healthcare facility. Medical records get stolen, and so you can mitigate them to some extent. But you can't stamp them out. And so, what are the things that you can use to detect what's going on? And this is it. Catch it quickly. It's not going to cost you a lot of money. Let it metastasize. It's going to cost a lot and it's a lot more painful. So, in those terms, let's turn for a minute because I do want to make sure we get to cover this. So, you offer, and of course, Adlumin works in partnership with you. You have a certified warranty, 360 certified warranty program. So, maybe tell us a little bit about that and how it differs from a traditional kind of insurance policy.
Yes. Well, the first thing is when we started this path of creating the Cysurance, one of the things being a cybersecurity person and also being a finance person that I really wanted to identify for organizations adopting cyber insurance is, are you with a product or a service and or right that is effective? One of the things we know in cyber is that there's a lot of really good marketing and there are a lot of companies. What works, right? And so that was the basis for us, which was certifying solutions so that we can rely on efficacy. And really that's in the stack. So it's not just one solution, but it's two things. One is the solutions that are adopted in that security stack that help limit lateral movement or help prevent business email, compromise email from getting through, and security
Mhm.
awareness trainings are all wonderful things. But they're also the internal controls that we think about: patch cycles, having endpoint management, ensuring MFA, encryption, all of the things that help organizations maintain their compliance to state and federal laws that
Right.
or regulations that are in place. And so that's what we wanted to certify, and we wanted to make that the basis. And we felt like when we could do that and prove that in the market, which we've been in the market with this product for a while, that we could prove to the carriers that actually reduces the severity and impact to the carrier market in traditional insurance policies, because we're actually demonstrating what works. And we put our money where our mouth is on that one. And also so I call it the layered risk model, which we assume a portion of the risk. And then what we really want is that primary policy is which is what it's called. It's the policy that's traditionally in place. That then becomes almost a catastrophic loss policy. So we can help remove a little bit of that financial burden from the traditional insurance market while pointing to the end user customer that they are safe and that they have the capability um, to get financial remuneration and from the products that they're using, and we know that they're effective.
One of the other things too that I liked about it was when I looked at the claim form, it's fairly straightforward. It's not a,
Mhm.
you're not submitting the 18 wheeler full of long haul truck, right? Full of
Right.
documents, which is good. And we've certainly seen a real uptick, right? And that's exciting for both companies, right? But for me, I am extremely happy to see that occur because I know, like I said, a lot of these companies aren't sure how to get some kind of insurance. They're not
Mhm.
sure in any way how they validate what it is that they're doing, other than paying for some kind of external audit. And often, the Fox guards the hen house, and whatever MSS company is providing the services is also, providing that kind of validation for them. Um, so I'm glad that we're able to partner here, and I'm sure it's going to expand as we continue, which is terrific. And like I said, thanks for giving us that kind of that view into the insurance world. But before we go, I wanted to ask you about one other item that we saw in the news now a couple of weeks ago. Um, about 2 weeks ago, I think October 30th, the SEC formally charged Tim Brown, who is the CISO with SolarWinds after the big SolarWinds Orion and the Sunburst attack, back 2 years ago now. And as part of that, they have alleged that he defrauded investors by overstating SolarWinds cybersecurity practice and understating or failing to disclose known risks. And the complaint also alleges that public statements made by the company about its cybersecurity practices and risks were actually at odds with its internal assessments. And to provide, I guess, let's call it preliminary evidence to that, is things like internal emails and so on that went back and forth between Tim and others. And before I get to this one, I will, for transparency, say I have worked with Tim Brown. In fact, he and I did some work together at a large legal conference called ILTA back in August of this year. So, I did have time to spend, I did spend time with him, had lunch with him, and we talked about this. But that was back when it was a Wells notice before the actual formal charges. So, what do you think's going on here? Like, from both, what do you think the SEC is attempting to do by naming a CISO, which is one of the first times, and then also, what do you think this might mean in terms of the insurance industry?
Well, it's an interesting time, right? Because when we think about some of the large breaches like the Equifax breach and some others, and
Hmm.
things were pointed clearly at the CISO, and
Right.
how prepared was that person? Did they have the right credentials and so on? And then you find that in some way, shape, or form, the organization wasn't supporting that individual in the way they should have, or listened in the way they should have.
Right.
And there's always like this friction point. And I think that one of the big challenges is that while someone has the title of CISO, the I think, and this is really truly my opinion, that the C-suite itself doesn't give the right gravitas to that particular title. And so
Right.
it's at odds a little bit, because they that CISO needs to be able to have board level access. And so my hope, unfortunately, there are people who kind of have to go down in the middle of this, but my hope is that it starts to orient towards it being a true board discussion where we've run out of time in our board meeting today. And so CISO person has 3.5 minutes left to give their talk when they were supposed to have 2 hours, which
Yeah.
happens a lot, right? And
Yeah.
so perhaps this now gets the industry and boards particularly focused on the fact that this is very serious and it has massive implications to the profitability of an organization. And unfortunately, I would say that heretofore, when you looked at stock prices, they recovered decently quickly, even if there was a hit in some way, shape, or form.
Hmm.
That these have lasting impacts to organizations, and so that's, I think, at the macro level where we need to be focused.
Yeah, and you're right, and I think we're going to see a lot of interesting reactions here, right? For example, I'm sure every CISO is going to make sure that every decision and every turn down of budget and so on is well documented somewhere, as you say,
Mhm.
right? That document the friction between the well and the need for the water. Absolutely. What do you think about in terms of things like? Directors and officers insurance, because you just mentioned how
Mhm.
they're not generally on the same sort of footing as, let's say, other
Exactly.
fiduciary officers like the CEO or the CFO.
Right, and that's a challenge, and I've been thinking about this a bit as these topics come up, which is a CISO is not an appointed officer of an organization, and so they don't get the same air cover as those
Right.
who fall under that D&O insurance. The other thing is that, D&O insurance only goes so far. If it turns out that there is gross negligence or something else, then it starts to shift away from whether, and not to say that this is the case here, but criminal events,
Hmm.
D&O kind of only has a certain distance it can go with that as well. And so my question is whether there's a place for a private insurance policy where the CISO says, look, I'm going to, like you call it, like malpractice insurance, like I'm going to
Hmm.
get this for myself in the event that I'm not supported by my organization. I have some way to protect myself because, just think about legal fees
Oh,
and
yeah.
how do you get support from that?
Oh, yeah. Tim talked about this over lunch, and please, this is my interpretation, not his specifics. But yeah, we're talking an order of magnitude of seven figures in legal fees, and if there are
Hmm.
penalties that are awarded, that could be the same thing. If we look at other SEC violations, and then worse too for the individual is that often. They place, like, against board members as an example, right? There's often some kind of sanction, right, with a blackout period that says, okay, you can't be the officer of a company for some period of time. A prohibition from participation in the industry. So if that were the case, not only you're out of a job, you've got these massive legal fees, and by the way, you can't actually work in your area of expertise, or at least not at that scale for a public company. You'd have to go find one that's private. So it's a pretty damaging storm against those kind of individuals. So you're right. I could see how some sort of, whatever you want to call it, right, private insurance, individual insurance for this person, just in case things do really go wrong.
Yes, I think it also speaks to the thing that we've been talking about right now, which is the thing I think insurance does for us in this strange sort of way is it brings back alignment between business mission and what the security people need to do. And when I think about that total cost of ownership, where we look at being able to look at certified products and then having discounted policies that sit behind it so that we can offset that security spend, that changes the nature of the conversation internally. And we certainly see that now. We have CFOs and CISOs on the phone together, and I'm like, oh my gosh, like we did it, right? We actually got
Yeah.
them to talk to each other. Um, and so I thought that's a huge win. And perhaps if we're able to do that and do that more, we can limit some of these types of situations and really get people on the same page.
Yeah, that's great you say that, because whenever I run, executive sessions and tabletops and things like that, or even just when we're talking with the sort of the, in a smaller organization where maybe there's not a traditional CISO, right? There's a director of IT or VP or something like that. Is the, okay, we gotta get you connected to the CFO or your general counsel or someone else who can change redirect the narrative of what we're talking about, get you out of the ones and zeros and get you in the dollars and the cents, so that CEO understands the liability potential here and what that looks like. And if it's a challenge like where, let's say, specific officers don't want to do something, like, I don't want multi-factor authentication, that's just, that's inconvenient, right? It's, oh, I have to
Right.
click on multiple things. That's, forget it. And then, that's a matter of getting the CFO in, or the GC, who says, well, here's the challenge with doing that. You're walking around with a laptop that's got, 40 million in assets sitting on it. I need you to sign this document saying that you're going to, take personal liability for that. And of course, no person in their life is going to do that. And they're like, fine, give me the VPO, install the app, or give me the token, or whatever the heck it is I'm going to get. And I've certainly seen that too. And proprietary businesses, right? The law firms, the accounting firms, not mom and pop, but the sort of the proprietor owned type of business, like the manufacturing firm that starts out as a little small thing in somebody's garage and ends up being this big scale factory, and yet you still got the inventor is now the CEO, and and really doesn't understand the scale of their business from a security risk perspective. So it's always good to find those allies and figure out how you can broker that conversation, or create a, I talk about the Rosetta Stone, right, that translates the ones and the zeros into dollars and cents.
Yes, yes, exactly. And that's the thing that we're trying to do is create that bridge, the translation bridge between this is the security posture, but these are the things that means financially. Like you were
Hmm.
saying earlier, the around this is how much it costs to have a ransom event. And but very often people are like, oh, well, that's never gonna happen to me. That's a corner case. And it's like, no, but let's really think about the business impact. But just going down, having business downtime, and also orienting organizations to what is most meaningful for healthcare. Losing data is a massively impactful event, but for manufacturing, business interruption is what is really the big
Right.
driver for them. And so this is also the thing like that you do that I think is so effective is helping organizations orient towards, well, what are the compensating controls in your manufacturing environment? Because you can't patch that particular machine. We can't take it down. How do we segregate it from the network? How do we do other things so that we know that we can still be compliant with an insuring agreement, but also be realistic about what we can actually do in environments. And those are the services wrapper, as I like to refer to it.
Right.
That's what the services wrapper does to be able to help you and me be in alignment that we're doing the right things to keep someone compliant and insurable at all times.
Yeah, absolutely, absolutely. So along those lines, I wanted to ask you real quick because we are starting
Mhm,
to push up against the clock here.
mhm.
Is, what's the one thing you recommend that small organizations can do to protect themselves?
Well, it's certainly MFA. I have seen
Hmm.
more events happen just simply because email isn't locked down. I mean, it's really a key thing. It seems so very simple. And then making sure that you are encrypting key data and knowing where your data is. It just or are. It's it's a it's a key. Those are really the two big things that I see because it's like if you're going to think about what impacts you the most financially, you cannot let someone get into your email. It's disastrous.
Hmm.
It's hugely impactful for a variety of reasons, but also ensuring that you don't have data floating around all over the place. And we invariably find both large and small organizations, you run a check and they're like, what's that doing over there? And it's like, well, don't ask me. Like, I would like you to tell me that. So those are some key things for me.
Yeah, that's a great point. Or the vendor ends up having some kind of
Hmm.
security incident, and they think, well, that's fine because they only provide, they supply this thing or this service, and then they realize that no, they actually have access to data, and here's what it is. And okay, so normally I'd ask two more questions, but I'm just going to wrap it into
Hmm.
one. So, what's a quote or a rule by which you navigate your life?
Well, for me, I would say that there are risks inherent in anything that we do. It's just you can choose to do nothing or you can manage it effectively, and it's going to be there one way or the other. And so, especially when I think about cyber risk and insurance risk, we can leverage it as an absolute business detractor or it's an opportunity. And I choose to look at these things as opportunities to move faster, to be more effective, to be more efficient. And we can use security to do those things and not be treated, as you say, like MFA, it's a business detractor. No, but there are many things that help us move faster. And I would encourage people to think of it that way.
Yeah, I think that's a great view of security. Like it's not an inconvenience, right? It actually does provide beyond to keeping things secure. There are other values, and it does allow you to do things like digital disruption, right? So to facilitate that emerging
Mhm.
tech, access to markets, and so on. So, Kirsten, this has been incredibly insightful and enlightening, and I thank you so much for your time today.
It's my great pleasure. Thank you for having me.
Oh, I hope we have you back on soon. So, with that, everyone, thanks very much for joining us today. You've been listening to Cybertide with Mark Sangster. Today we were joined by Kirsten Bay, CEO at Cysurance. Join us for future episodes in which we invite more experts to reveal the contributing factors and costs of cyber incidents and how your firm can protect itself from business disrupting cyber attacks. For more information about Adlumin or for a demo, visit adlumin.com. To order an audio, digital, or print copy of my book, No Safe Harbor, The Inside Truth About Cybercrime and How to Protect Your Business, visit mbsangster.com or amazon.com.